Hey guys, Justin Bill with the Starlight Realty Group, and now that it's September, we've got a fresh market update for you so you can know what the key metrics are driving the Hampton Roads real estate market. So diving right in, we've got total active residential listings currently at about 4826 to start September, compared to last year where we were looking at 3,955 homes. So that's an 18% increase in the inventory of homes available. How much are those homes listed for on average? Well, about 445,000 on average in the Hampton Roads region. Compared to this time last year, it was 415,000. And how much are they actually selling for? Selling for about 406,000 right now, compared to the 401,000 we were looking at last year. And again, list price to sell price averages. We just broke down the average list price and the average sale price looking at the year-over-year changes. What that reflects to is actually 100%. So what that sticker price is usually what sellers get, which means they're doing price reductions to make those sales happen and offering more concessions, especially considering that there's 18% more homes available to choose from. That's a lot of competition for sellers. How long is it taking to sell homes in this market? About 20 days, down substantially from this time last year where we were looking at 29 days. And number of home sales year to date, we're just under 15,000. Last year we were just above 15,000. So we're down in sales year over year, less than 1%. How many homes are just not selling at all and expiring? Well, quite a few actually. 2,916 to start September compared to 2,460 last year. That is a over 15% increase in the expired listings. Overall appreciation or depreciation. If you've owned your home for a while, what's the value rate of growth? Well, you're looking at just under 7%. If you bought last year, if you bought the previous year, you were looking at just over 5%. Powers combined, that's almost 12% growth in 2 years compounded. So real estate's still a safe place to hedge funds. Number of months of supply, this is interesting. We're looking at 3 months compared to 2 months, which is what we were at last year and most of this year, aside from January, February, those slow months. And now we're back at 3 months of inventory. And what's the prime interest rate driving all of these numbers? That's 7.5%. They held fast and didn't lower it again. And prime interest rate last year was 8.5. So it's still down a whole point from where it was last year, but it needs to come down some more. And I think there's a lot of people working to that end. When that happens, it's going to be interesting in the marketplace as more buyers come to the market. And sellers are going to have to compete with other sellers as it shifts from a seller's market to a more balanced market. So it's going to be an interesting fall. We'll see how things develop. And as always, please forward this along to anybody you think might benefit from it. And if you have any questions or concerns, feel free to reach out. Happy to have conversations about real estate and what these numbers mean for you and yours. So I hope everybody stays safe out there, and we'll see you soon.